Hey, it's Richard. We're going to be doing the June 2022 market update here, just the commentary part. I hope everybody enjoyed their Independence Day celebration. I hope you understand the purpose of that holiday and what we're celebrating, the Declaration of Independence. Go read it. It's very pertinent right now. Anyway, we're going to do quotes. 75 basis point increase is not something that the committee is actively considering. That was Jerome Powell. We've already done a 75 basis point increase, so they didn't see inflation coming, right? This was transitory. Inflation is actually good for you. Okay, we might have to start raising rates. We're going to continue selling the balance sheet, and maybe 50 basis points. We're not going to do 75. Oh, we just did 75. So let's see how this continues, the line of thinking. I'm going to preface this with a larger quote because I didn't want to write it all up there, but at the ECB forum, incredibly interesting discussion. I actually considered just doing a rebuttal video to each little part of this. It was so infuriating to me, if you can imagine. Anyway, let's see. So this was the question to Jay Powell. It said, hindsight is a beautiful thing, I know, but going forward, how do we need to look at inflation differently? So for example, in the US, the stimulus. Did we circulate the impact this would have on inflation? And that was Francine Lacroix, who's actually a Bloomberg reporter, who was kind of doing the question and answer. So then here's the response from our Federal Reserve Chair. I think we now understand better how little we understand about inflation. Yep. I mean, come on. This was such an enlightening discussion there. It could go on. One of the things that I do want to mention is Augustine Carstens, I think he's Mexico, but he was representing more of an emerging markets take on economics as opposed to Lagarde, and then you also had the British. Anyway, all the fancy developed world was talking high fiscal policy, and then you have this one guy who just starts bringing up supply side. They don't have the reserve dollar currency, and they have to care about supply and demand, not just demand, right? Which is pretty much what fiscal does, is demand side economics. It's what I harp on constantly. It's the lack of supply side thinking. So he mentions, that's what's worked well for us in the emerging markets, is focusing on the supply side, to which point Jerome Powell comes back and says, we probably could stand to learn something from those supply side guys. Right after that comment saying, oh, we don't understand inflation. Wow, man. If you're not paying attention, I mean, it's your fault at this point. Jeez. Okay, so let's dive in some more. I got a bunch that I'm just going to read that didn't feel like putting up there, but he continues that thought. No, honestly, it was unpredicted, the inflation. I mean, by them, it was unpredicted. I don't know. Is this ignorance? Just because you didn't come out and say it, did you really not see it coming? I mean, come on, you had to have seen this coming. Everybody saw this coming. It's just, how can they kick the can down the road, off the cliff? Anyway, let's get into a little bit of common sense here. Production of fiat money is not the same as real production within the economy. Duh. That is supply side economics, considering what it takes to produce. And obviously, throughout the rest of this video, we're going to get into oil and commodity prices and inflation and all that stuff. But production, if you don't have a supply, it does not matter who wants it for how much. Toilet paper, remember? Anyway, all right, so let's move on to Murray Rothbard, who's incredibly smart. By the way, that was Brandon Smith. That is not the CPA Brandon Smith here in upstate South Carolina. A couple of my clients work with, so different Brandon Smith. But let's get to Murray Rothbard. No one prints dollars on a purely free market because there are, in fact, no dollars. There are only commodities such as wheat, cars, and gold. The way that we define a dollar is a measurement of a commodity. It actually used to be a very scientific way that the term dollar even came up. It equated to $20.67 per ounce. And they actually did it back with grams and so forth with some really precise measurements, right? So dollar is not a piece of paper. It's not even this digital thing that floats around your account statements. It's actually a measurement of a commodity. That's what the word means. So I don't know how we turned it into this system, but common sense prevails, hopefully. All right, so Druck comes out. Once inflation goes above 5%, historically, it has never come back down without the Fed funds rate exceeding the CPI, 8.6%, right? And so we're going to go by 0.75% at a time. But does the Fed think that they're going to hit it and get that soft landing just right? No, they'll overshoot it. They'll overdo it. They're reading lagging indicators and making forward projections. There's the science of their economics is complete crap. I mean, that's the flat out way to say it. There is not much common sense in the way that they manage our entire economy and therefore culture. But you probably realize that, right? You probably feel that, I hope. But anyway, learn it. Study this stuff. It's common sense reading. It's English. It's not math equations like you're expecting. Okay, so Matthew Lazzetti, which is Deutsche Bank's chief U.S. economist, what he thinks probably matters. I pay him a lot for his opinion. So it is unlikely that we are going to get inflation down to the 2% target without some upward movement in the unemployment rate. Such a strong economy with our low unemployment rate. Don't look at that participation number. Gosh, no, don't look at that. Our productivity, don't look at that either. Just this unemployment rate is great. Yeah, until we see what's coming. So get ready. I hope you like your job. I hope you can keep your job. I hope you like the benefits. And it's about to get really, really rough. And the chief U.S. economist sees it coming. So we can't say it was unpredicted this time, can we? I mean, this is dominoes falling. You see how they're set up. It's just what's going to happen. So this should be terrifying to you, but it gets worse. I've got a few things. Let's see, what order am I going to read these in? Let's see, that's kind of what the whole point of it is. That was hilarious. I'll do that one. Oh, this is cool. The Italian energy minister, his name is Roberto Cingolani, says, gas prices are rising, not for a physical reason. The price is rising just because someone somewhere from a keyboard has decided so. Oh my God. I mean, where do you start with that? It actually keeps going, the same guy. So now we're talking about putting a price cap on oil, right? That's basically what we're doing here. Imposing a price cap seems to be the only sustainable solution that would avoid the risk that someone waking up some morning could put forward a crazy gas price level. What is crazy? I think where we are now is pretty crazy, right? Do we have to be here? We don't have to be here, but this is how they think the economy works. I mean, I think this guy, I mean, he's an energy minister. He's probably not in economics. He's probably anti-oil, anti-fossil fuels, like renewable, save the planet. That's what he is. His background is probably more in line with that kind of thinking. By any means necessary, we're going to get that narrative across. So, oh man, this one, I'm sure everybody heard this one. This was really frustrating, right, to hear. If you heard this, you should be furious. If you didn't hear this, go watch the video, because the facial expressions and the tone and gestures, I mean, it's telling stuff. So this is Michelle Singletary of the Washington Post as a guest on MSNBC. Says, there is a great deal of Americans where it is uncomfortable that they're spending more, but they are not going to go under. You've got to stop complaining. You still have your job, for now. So I'm going to need you to calm down and back off. But inflation's good, right? I mean, isn't that what we were told when it was after transitory? God, man. Okay, so let's move on, because you know the solution that's coming, right? Inflation is, number one, Putin's fault, and number two, our opportunity to transition away from fossil fuels into the glorious world of solar and wind. Okay. So the Build Back Biden or Better plan. Sorry, whatever. I know it's derogatory. I'll try not to do that on this, but it's hard. So this is Cecilia Rouse, but the Biden economic advisor, and she says, so that's not the kind of dollars that is stimulus, it's investment. And it's the kind of investments that actually pay for themselves over time. So that's smart economic policy right now. Wow, we got some definition issues, as usual, right? There are a lot of definitional issues I get into here. An investment is based in capital, which is asset, but stimulus is debt. So that's the other side of a balance sheet. So investment, and it's going to pay for itself. So it's going to return itself. So it's investment. Is there going to be a return on investment? Return of investment? Just, come on. Like, what you're trying to say here is we think it could be profitable, but we're not really going to put any of our skin in the game. We're going to print it and let the people who can't afford their basic needs pay for it with extra inflation down the road. Because, I mean, I think we now understand how little we understand about inflation. Yes, he's exactly right. They are freaking clueless. Okay, so smart economic policy right now. Keep the money machine rolling. Okay, let's get to the end of this. I'm going to do that one very last. But because it's all about green energy, because this is Bernie Sanders' agenda. This is not Biden's, right? If you go back to the primaries, this was how can Biden win the Bernie bros. So we're gonna do this differently than passing the legislation, just to put it all together for you in case you haven't figured that out. This is Gina McCarthy, the climate czar, right? We hate Russia, but we got czars. Hilarious. All right, she says, we just had a recent report that is showing that all of the energy and employment stats from last year, clean energy is winning. Fossil fuels losing jobs. That's not going to win over a mansion on anything. Just poor politics. But so wait, it is that obvious that that's what this is? Is that we just hate energy so much that we're actually going to sacrifice economic livelihoods. Like, it's not even about waiting for the food costs to go too high or for us to have to not use the air conditioner or have rolling brownouts across the country. That's not enough. We're going to go ahead and put people on that unemployment roll when Matthew Luzetti actually said, it's coming. It's coming. Okay. So, to continue, because it's not enough that they've just lost their jobs, the tech companies have to stop allowing specific individuals over and over again to spread this information. And what she was getting at is that, when you're reading what like the American Petroleum Institute or any of these people who are explaining Econ 101 to these morons, whenever somebody brings that up, she's like, oh no, that's just lobbies. They're just trying to be greedy and make money because they don't have anything in the world of wind and solar. Well, come on. Do you think Exxon or Chevron or anybody would not invest in something that would make it profitable? If our production costs could be low enough that our energy output was high enough to increase our standard of living, that would generate real demand and real profits. Of course they would invest in it, but it's not profitable because the science is not there. Okay? That's it. This whole green initiative, this ESG garbage, is completely sabotaging our economy in the midst of a currency war, in a recovery from a government shutdown that was ill-advised, that had nothing to do with science. Okay? Let's get into the science of trying to eliminate carbon emissions, if that matters. What's the good news out of CO2? I'm going to put that in the next thing. Tomato supply is set. We don't have to worry about inflation on tomatoes because if there is excess CO2, that's actually better than the 1 or 2 degrees Celsius rising temperature for actual yield output. And I'll show you the numbers, like, duh. Let's do real science, y'all. That'd be cool. So last and not least, because this is trolling. This is good trolling. So right before 4th of July here, Biden tweets, because he's a master tweeter, right? bring down the price you are charging at the pump to reflect the cost you're paying for the product, and do it now. Oh, so much wisdom. So, the U.S. Oil and Gas Association replied to that tweet. Working on it, Mr. President. In the meantime, have a happy 4th, and please make sure the White House intern who posted this tweet registers for Econ 101 for the fall semester. Nailed it. All right, we're going to come back and do some actual data and talking points instead of just what a bunch of people have said. But it does matter. We'll be back. All right, we're back. There's a lot to go over here, so I'll jump right in. Year over year, Independence Day costs, right? We celebrated that last year. There was a 16-cent decline if you downgraded your food items, but year over year now, we're anywhere from 17 to 36% more than what it cost to do a barbecue and a cookout last year. And there are different surveys going on out there where you can grab those numbers, but pretty obvious. Oil is up 107%, gasoline's up 49%, utility gas is up 30%, meat 14.2%, and electricity 12%. But electricity, anyway, since 1990s, inflation calculation was abandoned for something that's easier to manipulate. If we used that calculation, our real CPI would be up 17%, not the little 8.3 or 8.5, 8.6, depending on your time frame when you're looking there. So they manipulate statistics. Who would have thought? Shipping costs for fuel, right? So we've done all this sanctions garbage and tried to separate all the world apart and impose some hardship on those Russian people and the oligarchs that they control. Wait, that's backwards. But yeah. To ship fuel, and that's either diesel or gasoline or kerosene or some refined fuel from U.S. to Brazil, that's the TC-18 trade route, used to cost $3,700 a day, which is pretty high. It's now $37,000 per day. Yeah, that's a big percentage of increase. That's 1,000% there. You need, or 900 gain, but anyway. South Korea to Singapore, that used to be $98 a day. It's now $47,000. That's a big number of inflation. But see, that's actually an imbalance that was created. That's a sanctions imbalance of inflation that's not driven by fiscal input, like printing money or inflating the M2 money supply, all of the basic stuff I cover every single month. This is just terrible mismanagement of resources that's caused this. And you could call it geopolitical, but it's purposeful or ignorant, just like everything. The Mideast to Japan, the TC5 route was $61 a day. It's now $50,000 a day. So what people are realizing in the shipping industry is that, gosh, I'm making a fortune transporting fuel. Am I going to ship some containers? No. So what does that do to the cost of shipping in containers? It goes up too. That's real supply and demand in relation to something that is false supply and demand because of interventionism. That is the name of the game here. We've got the Great Purge taking place. I found that interesting. But so this is about truckers, right? And I've got a couple of clients that drive trucks. I've got some great contacts locally that work at the inland port here in upstate South Carolina. And the way that world works is there's contract work and there's spot work, whether you're picking up a load to go from here to there and pick up something else nearby to transport it to where you're going and bring back a contract that's on an ongoing basis. Well, there's more money in spot, less in contract, but as that shifts, as this demand starts to drop thanks to our increased interest rates, we're going to see continued business for truckers fall off. And the price of their trucks are falling off. The costs are up 51% year over year. Some of that's diesel, but there's also insurance and other regulation stuff going on. And throw California's emissions stuff in there, and it's just the great purge of truckers is coming, right? And so we thank you for keeping the economy going. during COVID. I don't know if we really did keep the economy going, but definitely truckers are awesome. Truckers are incredibly important to the economy, and they're about to be thrown out with the bathwater. So is this what we want to do? Do y'all care about the consequence to this? Because it's coming. It's cause and effect, and it's pretty clear. But Newsom, you know, he's a fiscal hawk, obviously. He pared back his inflation relief plan from $18.1 billion to only $17 billion that he's going to give out to the middle class, hardworking families of California, and lure back the people that fled over to Florida to get back some tax revenue. Yeah, you got a surplus of $17 billion that you can hand back out. You're doing it wrong. You're also creating inflation. This is exactly what Powell and Yellen are doing the opposite of, right? Although we'll get there because they're not consistent. But yeah, keep printing that inflation relief, geniuses. So to that extent, we've got Janet Yellen, who, you know, she would actually support a tax holiday, a gas tax holiday on a federal level. And we'll go through the mental gymnastics there. But rebates, the gas cards that are going to be sent out, export caps, how much natural gas can we send out? Well, if our refineries aren't re-inspected and up and running, hardly any, right? And that keeps our prices down, but it's killing Europe. Price caps, oh my gosh, like, we don't learn from stuff. I did this last month, which was really only like 2.5 weeks ago, but God, it's just so sad. So this 18.4 cents per gallon that the federal government is taking from your gasoline gallon, we don't need that apparently. They're going to cut the need for the revenue, right? It's going to cost them 18.4 cents per gallon. Gosh, talk about just it's just a joke how it's manipulated language. But 18.4 cents will come down in the gasoline because the federal tax isn't there. Is there still a need for that revenue? Are they still going to spend what they're going to spend on infrastructure and highway and bridges and the stuff that we do need to do? I'm not against government doing what government should do, but if they didn't need the revenue, why was it there? Oh, because they did need the revenue, but now that it's not there, print it. Deficit spending, debt, right? It's a circle of idiocy, right? That's what this, I mean, there's no other way to put it. 24.4 cents per gallon of diesel, that would help these great purge people a little bit, maybe, but man, they're doing so many gallons. Think about shipping too, you know? Go electric on your shipping. All right, paycheck to paycheck. We did this at the end of the last video where I was kind of talking through the millennials versus the boomers. It was a generational thing, but we're just going to cover U.S. households, right? So U.S. households that are living paycheck to paycheck, 61% are not able to accumulate a penny of savings. Yeah, it has to do with wage growth not being enough, and I don't think minimum wage is the answer, but it's about wages versus productivity and production of supply, period, right? If we're not working, why are you getting money? Why are you getting paid to not do anything? I mean, who thought that was a good idea long-term economically? Did you see it coming? All right, so 80% of families making less than $50,000 a year are paycheck to paycheck. I thought the rulers were in favor of the low income. This isn't middle class yet, right? Low income, under 50,000 joint, 80% are paycheck to paycheck. Do you think that's better or worse than it was, let's say, 30 years ago, 40 years ago, 10 years ago? It's worse, right? Why? Because of what we did, locking down, shutting down an economy, and printing our way out of it. It didn't get us out of it, it dug us in a hole. So now the middle class, the 50 to 100,000, the majority, 63% of households in the middle class are paycheck to paycheck. How are we going to retire anybody? We're just all going to work forever now? Like, it's not enough to pay all the taxes while we work. We also have to continue to work and probably continue to pay taxes. We'll change the requirements of Social Security. We'll inflate our way out of that one, right? Do some currency manipulation, but It looks like a downward trajectory across all standards of living. 250,000 plus, 36% are paycheck to paycheck. Sorry, that's values. That's bad priority management. I mean, still, it's for that 36%. And we did that generationally. We know exactly where that comes from. But there's no reason for that. There really isn't. So sad to see, but it is the way it is. So let's jump to the other half of the board so I can save some time on this video. Who are the top customers for Russia on their fossil fuels, right? Because we don't want to support their war in Ukraine because they might come after us next. I mean, they're that good, right? They just mowed right over Ukraine that, of course, they can take over Germany and France and come on. All right, so the top, this is in order, right, of who's bringing in, who's buying the most stuff from Russia. China, duh. Germany, Angela Merkel, that was a bad deal, told you so. Italy, well, we read what that guy thinks, great economist. Netherlands, we'll get back to them here in a second. Turkey, oh man, they got what they wanted, right, on that Sweden and Finland deal. Poland, doorstep, right, of Russia. But they're they're buying the stuff. France, India, South Korea, Bulgaria, Belgium, Greece, Spain, Japan, Austria, Romania, UK, Slovakia, Estonia, Egypt. Who's in the Paris Accord of that? I mean, shouldn't you already been trying to get off of it? Oh, we should have done it 5 years sooner or whatever. Well, they're not even following the sanctions. You think they were going to follow the accord? Nope. This is just an absolute joke. Now, if we compare that to 2021, you know what's hilarious? Russia's already brought in enough money to compete with all of what they sold in 2021. It's July. Halfway through, they've made the same and they've delivered less. Are we hurting them economically? Have you looked at their currency lately? This is just, I mean, maybe they just hate Russia, but their actions show otherwise. Their actions show that Russia and India and China are actually rising economically, while who's suffering? Who's not up there, by the way? Out of all the Western people, right? The US. Hey, at least we actually followed through, and we are not buying Russian oil, because how much of that did that make up for our economy? Oh yeah, that's right, we were net exporters. We didn't use any. So we've just raised the price for nothing. God. All right, BRICS. So while the G7 was going on saying that the only solution in Ukraine is to provide more military support, that's the only way that you can get out of a crisis, is fight and employ Raytheon and all these other. Go look at the military industry, how much they're up year to date. We seen that before? Ever? Always? Okay, so while the G7 was saying that we're going to fight to the death, as long as there's a Ukrainian alive, we're going to fight Russia. Cool. BRICS had their summit, right? So that was in Beijing. And Argentina and Iran went ahead and turned in their application into the BRICS, right? And that's going to be a little bit chaotic, just FYI. I've done a few of this background when you're talking about asset-backed and commodity-backed currencies and their transfer systems, how they're able to pay and bypass that whole SWIFT garbage that isn't that SWIFT, honestly. But now look who is in discussions to apply. Saudi Arabia. Oh, wow, OPEC. We wanted to try to get their oil because theirs doesn't hurt the earth, environment. Only American oil drilling hurts the environment because our regulations are so soft and oh, whatever. It's better to, maybe we're back to thinking that there's not enough, right? Before we figured out how to do the horizontal drilling and shale and all that. Oh, before we shut down 800,000 barrels a day of the Keystone pipeline. Okay, whatever. But Saudi Arabia, who we thought we were good with, that won't really talk to Biden, who Biden got angry about because of Khashoggi and all that crap, which, come on, really, in the grand scheme of things, economically, like, third world countries are going to get obliterated because of all the stupidity involved here. But Anyway, BRICS is coming together. They're getting their act together. They were discussing real stuff at their summit as opposed to the G7 that was just like, NATO or bust. Okay. Tomato yields. Since 1990, science has gotten really good at adapting to climate and learning how to increase yield on crops. Who would have thought, right? I thought all we did was bioengineering and pharma. But apparently, we've learned how to feed a world population. So China has increased their tomato yields by 118%. That's pretty cool, right? And so that has to do with CO2, sunshine, nutrients, fertilizers, right? Oh, we're cutting back fertilizers. Oh, well, now we could say that it was, is it still global warming, or is it just anything that changes that's going to hurt our tomato yields? I don't care. U.S., we're up 101% in our yields. India's up 60%. And just across the globe, you look at, Tanzania, they can even increase their yields by 41% since 1990. And that just has to do with basically, that's agro, like, duh. Like, but we'll get to seeing how this becomes a problem. In agro, farmers and ranchers are in for it here. We've got I gotta be careful on this one, my goodness. So, the enhanced standardization of climate-related disclosures for investors. Because these are businesses, they're farmers who maybe have a small family farm and have forever. And this mainly affects the small ones, right? Because if it's like a huge, massive farming corporation, then likely they've got IPOs and shares, and they have to do their normal quarterly reporting, etc. But for the small farmer, they're lumped in the same group. So now they have to do all these filings with the Securities Exchange Commission. Costs to do that, fines if you're not in compliance, and disclosures, which gets really a little creepy here because you're disclosing your personal financial stuff. A lot of these farmers live on their farms, and now you're having to disclose your household everything. Like, these are farmers. These aren't like C corporations. But this is where we're going. We're going to regulate ourselves into a green world. I see it a lot in my line of work. In fact, there are now filters and screeners for ESG companies like Exxon. Did you know that? That's creepy. ExxonMobil is very high in its ESG score. And I think it's probably because of some stuff that they advertise or they promote, clean energy, and it's marketing. It is becoming marketing, because if you dive into the pro ESG companies, they're not really that good for environmental, social, or governance. But that's what's coming. Sticking to the farmers here, back up into the Netherlands, we got these Dutch farmers, Canadian truckers. Y'all did your thing, right? The Dutch farmers said, hold my beer. 30% of them are about to lose their farms, lose their jobs, just because of some green initiative. So there have been these cow protests where people bring their cows with them to these government buildings. There are some trucks that are just cascading manure at these government officials and buildings. It's go look it up. It's pretty cool. They're blockades. They're shutting down streets and interstates. I don't think they call them interstates, but you get the concept. And the worst, they're holding public memorials and dropping flowers for the people and farmers who have killed themselves because they cannot make it. That's a real thing. Look it up. We're now going to discuss gold bans. We can't buy Russian gold because that gold isn't as gold as normal gold, and it's going to hurt them because that's a big export for Russia, because you do all sorts of good stuff with gold. You can eat it, you can fly with it, you can breathe underwater with it, but it brings in money. But is it productive? Anyway, who cares, right? All right, let's go to the revisions for Q1. We just finished Q2, so let's talk about what we didn't quite get right in our measurement of Q1, because it was bad, right? That was the first quarter if we get a second bad quarter, it's a recession, right? 2 negatives in a row, or the definition of a recession, but you never know until you're looking in history. Great. That's how we make our decisions, is historical data, and then we do something projected and we don't take into account anything that's real. GDP was at 1.5 on a contraction. It's now 1.6. So that number was actually worse. They just didn't want to tell you back then. Price index was actually 8.2. It's at 8.1. They didn't want to tell you back then. Consumption, this one's huge, right? Personal consumption is down. They thought it was at a plus 3.8%, that we were still demanding 3.8% more every year, which would have been aiming at their little inflation goal, which is a whole other thing. It's actually only 1.8%. So a huge drop in demand. Yeah, we're raising interest rates. That's what we want, right? Well, this happened before we did 75 basis points. Whoops. Before we did 50 basis points. Whoops. My point is that they have no control over what's coming. They are just guessing and throwing stuff into the wind to see if it sticks, because 2% is our goal. That is our target inflation goal. Tell me why. There is no why. You don't come up with a 2% target goal for any reason at all. Why not 0? Why not 15? Why not -4? It's arbitrary. And if you really think about it, if there's this amount of money and we all have whatever money we have, but they print 2% more and then they go spend it and then we have to pay for it later because we didn't spend our money soon enough, technically it's a 2% economic management fee, which in my world, if I'm managing somebody's assets and I charge 2% fee, that's high. That's a very high management fee. But that's pretty much what the Fed says is a fair management fee, arbitrarily. If somebody would please reply with a reason as to 2% being the answer, oh my gosh, I'll get on here and completely apologize and give you all the praise in the world, because there is no reason for it. All right. This is kind of the summarizing, tough times that are here and coming. 79% of consumers expect bad times. Okay. So, but I mean, the economy's strong, we're being told. All of this stuff is just normal, and we're right on track to getting to our green, renewable, sustainable, blah, blah. But the median U.S. rent just crossed $2,000 a month. All right, that's a 15% increase year over year. It's actually between 15 and 20% year over year increase, depending on where you are. If you're in a red area, it's going up higher and quicker because you're being flooded by a bunch of people leaving the bad areas, right? Median U.S. home, right? Now we're going to talk about renters trying to get a home, right? Because that's the American dream. And I hate when I hear this, that, well, the American dream is dead. Not really. I mean, it's really getting harder. The opportunity is harder, and it's because of the regulation and the interventionism that exists financially, economically, and legally, right? This whole, well, I better watch out on that one. But with a 7% down payment, which is nothing, honestly, like you should have 20% if you're doing things right. If you had 7% down on a median U.S. home, that's going to be $27,400 that you need out of your checking account to put down to purchase a home. We don't have that though, right? So that rules out 92% of renters who average $1,500 in savings. And how many were paycheck to paycheck? Okay, so that's 4 million people that are out. Homeowner costs, just to keep your house going, air filters, lawn care, roof repair, whatever it is, that went up $720 a year. So on an ongoing monthly basis, did incomes go from $1,400 a month to $2,000 a month? Because that was the rent difference, right? We were at $1,400 a month as the median. Now we're at $2,020. So that $620 bump in cost, did you get paid that much more? No, we've covered that before. But so now, additionally, this gets crazy, 8.4 million renters are behind on their payments. How are the landlords going to handle that? Well, they're evil and greedy, right? They should suffer for the good of all, because that's the Independence Day we celebrate, right? Okay. And personal credit cards, they're maxed out. Ouch. Does this get any better? I mean, do you like tomatoes? Do you want ketchup on your burger? That's That's pretty stable. We figured out the yields on tomatoes. Okay, the camera lost its attention span. It actually ran out of memory, so I'm just going to add this little part at the end. There's some stuff I wanted to cover that I couldn't get up here on the board. Yeah, it was about, let's see, gold. If we're going to split up gold, it's basically going to do the same thing that's happened in the world of oil, you know, where the price gets better for Russia's friends and worse for its enemies. That's the problem with the way we're doing sanctions here, is they make 0 sense unless everybody's in agreement, which we're not. Let's see, de-dollarizing. You've got all the NATO and West, we're all selling gold, and the East and the South, they're all buying gold. And if you go back to, what was it, in 2008, 2010, and you would watch the, you know, the pawn shops and the cash for gold versus, you know, the CNBC ads, you'd see, you know, buy gold here. So that was a cultural phenomena of a mixed up market. Now we have the international version of it, spurred on by sanctions. Let's see, what else did I miss here? EU fragmentation, that's Christine Lagarde's biggest concern right now, and it should be. I don't see good things here for the euro. Oh, this was cool. This pertains to me similarly. At Matthews Wealth Management, we're looking to buy a building. It's been however many months now, and yes, regulations in my way. But not as bad as this. If you are opening a restaurant in San Francisco, you have to pay 13 separate fees, regulatory fees, totaling $22,648. That's not buying your building. That's not getting your Cisco contract. That's not buying your equipment. That's not hiring people. It's not getting tables and chairs or uniforms or any of the other real estate costs. That's just to pay off the state. Yeah, that's not very business friendly, but it's California. That's why everybody's leaving. Oh, to open a barbershop, let's see, 8 government agencies in total that you have to go through, and there are 55 separate steps to opening a barbershop in California. That is not friendly to business at all, right? That boils down to. H.R. 2543, according to Valiant News, would expand the Federal Reserve's existing dual mandate of maintaining price stability and full employment to focus on promoting racial and economic justice in borrowing, housing, and lending. It's already illegal to not have that be equal, but why is this going to be the Fed's role? Let's see, maintaining price stability. They didn't do that. They didn't even know that was coming. Gosh, imagine if they couldn't lower interest rates in a recession and couldn't raise interest rates in inflation. What would we have? Stable money supply and predictability, and none of these stupid bubbles that are just made out of nowhere. But also full employment. Well, why has everybody got hiring signs right before they're going to fire everybody? Remember, that was the big concern there. Actually, that was a quote. That's from the previous section here. All right, let's move on. The food supply disruptions that I was covering, the potash from Canada, the fires and the avian flus and all that stuff, there are 90 of them year to date. 90. That's a lot to list, so I'm not going to cover them anymore, but it's unprecedented. Just like a lot of stuff. Okay, so the only good news, again, tomato yields, right? But one more thing. In other news, Aspire Food Group, if you are looking into some stocks and you want to read what their company's about and how their balance sheet looks and income statement, they're a group in Canada, and they have announced they're going to start a new manufacturing plant that will produce 9,000 metric tons annually of crickets for human and pet consumption across North America. So, let them eat crickets. It's a good one to end on. We'll see you next time.